Welcome to Real Estate 360, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate 360, Tom K. Wilson.
Welcome back, and thanks for tuning in to our Real Estate RE360 program, your number one source for all of your real estate needs and education. We're broadcasting from the number one business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom Wilson, your host for the 2 p.m. Wednesday edition of Real Estate 360 that comes to you daily, Monday through Friday at 3 p.m., along with my co-host, Joe Kuchera and Laurie Graymont, and it comes to you also at 2 p.m. on Wednesdays and Thursdays. If you can't make the live show, you can catch our podcast on RE360radio.com, and you can catch my programs on TomWilsonProperties.com or on iTunes, or on YouTube. We have a great program today on the great world of commercial real estate, Part 1, with Rick Knauf, who's the managing partner of Colliers International, and we'll introduce Rick in a moment. But first of all, let you know that if you'd like to sign up for a weekly real estate economics newsletter, go to TomWilsonProperties.com. We'd be glad to add you to that list. And also, if you'd like to get a report on how to choose the best metro and product to invest in, we have that available to you as well. We always welcome your questions, welcome your suggestions for subjects, and we like to hear from you at any time. If we can help you with answering questions or help guide you in your own portfolio directions, we're glad to give you a free counseling session for that. So today we're going to talk about the world of commercial real estate. You know, we mostly talk about residential and 1-to-4s. Wilson Investment Properties is a turnkey provider of mostly single-family homes that are high quality and high cash flow. But as you accumulate more and more products in your portfolio, at some point, diversifying into something that's either multifam or commercial may be in your future, and even if it isn't, it's nice to know something about it. So when those kinds of products are in the area that you're investing in from a residential real estate standpoint, you know how they affect you. They're also good markers and indicators of what's going on with the economy. Very good to know about all aspects of real estate. So today, live in the studio with us is Rick Knauf, whom I've known for a number of years. Rick's the managing partner of Colliers International San Francisco Peninsula office, and it's up in Redwood City. And he's been in the commercial brokerage for 22 years. Also spent before that 9 years in residential development, which we're going to talk a little bit about as well. Rick's diverse background and real estate experience includes leasing, sales, land acquisition, securing entitlements for infill developments. While in the development business, Rick was instrumental in fueling the growth of the local development company and acquired sites valued in excess of $85 million, totaling over 450 units. He's specializing in the sale of land, representing both land sellers and buyers. Combining his extensive brokerage and development experience allows Rick to work closely with his clients to strategically identify their goals and objectives in order to arrive at the best real estate solutions. During his 31 years in career, Rick has negotiated over 1,000 sale and lease transactions on behalf of his clients and companies. He's consistently been a top producer and has received numerous awards from Colliers, as well as Broker of the Year award from the Association of Silicon Valley Brokers. Rick is active in many local charities, including Colliers International's Links for Life Foundation, and is a member of the Board of Fellows at Santa Clara University. And he and his wife of 26 years, Jody, and their 2 children reside in Montecito. And I'm pleased and proud to say that his wife has been a major contributor and our operations manager at Wilson Investment Properties for the past 4 years, and they've both become good friends and as well. So, Rick, it's What a pleasure. We've talked about this for quite some time. We finally got you on the program. Welcome.
Tom, thanks very much. It's good to be here.
It's wow, what a dynamic world it is out there in real estate in general, and commercial and multifam is no exception, as it certainly has its cycles, and when times are good, it's very exciting.
Yes, it sure is. With the real estate market, as you know, come many cycles and dips and peaks, and so right now in the Bay Area, we're in a good cycle at this point.
Of course, it's exciting whether it's up or down, but when it's up, it's exciting, and we have smiles on our faces, right?
That's right. There's a lot of smiles in the real estate business.
So you went to Santa Clara University, right?
Yes, I did.
And so what happened after that? Did you go in real estate right away, or?
So I graduated with a degree in finance back in the early 80s, and I was trying to figure out what to do with my first career step, and I'd been exposed to commercial real estate and went out and interviewed and talked to several companies and decided that, when I could go out and be an entrepreneur right out of school and build my own business, I decided that was a career I wanted to pursue.
That's what Silicon Valley does for you, doesn't it?
It sure does.
It stimulates that entrepreneurial drive, which is very exciting.
Yeah.
So what did you do first? What was your first career job, if you will?
So I went into actually went in as with a mentor in the real estate business to help me really understand and learn the business. So I started out in office leasing, and with a company by the name of Ashwell Burke, and then proceeded from that point to further my career with another company, and then I actually became a manager of an office in the late 80s for a company called Isle of Thorn. And then that actually was a big cycle where the commercial real estate industry at that point was way overbuilt, and we actually closed our office, and one of my first hurdles in my career. And then I actually went to work for Colliers International in 1990.
Yep, it's I think it's a value. It doesn't seem like at the time, but it's a value to for all of us to have some humbling experiences along the way. I remember my first startup company, as I was very excited about. I watched them chain the door. That was a very depressing moment.
Yeah, it's good though. Builds character, right, Tom?
Builds character, and it's expensive education, but it's a lot of education often. Right?
Yes, very much.
Yep. And then what?
So I got to Colliers, and then I kind of playing the clock forward. That first part of the 90s was very challenging. And then late in the 90s, I actually, when the market kind of came back, I had an opportunity to go into the development business. And at that point, been in the brokerage business for about 15 years, and decided that I wanted to go out and learn something else. So I went in the development business, which, everybody thinks is glamorous, and it became very challenging to be in the infill residential development business at that point. So I was in there for about 9 years, and then up until 2007. And then again, we hit another market dip. And so my next humbling experience was being let go in 2007. And in hindsight, I came back to Colliers International. It was a great way to get back in the brokerage business, which I've really enjoyed ever since.
What did you, so when you were in the development business, was that residential?
Yes, it was.
Mm-hmm.
Yeah.
Homes?
Homes in town.
Experience. What did you learn? What was difficult about that business, and what was rewarding to you?
So my position was I was responsible to go out and find development sites and then take that through the development process. And we were always trying, in that business, when you're working with infill sites, you're trying to add value and get projects approved, which it typically was challenging, and you had to work with the cities, the city staff, the city council, consultants, owners of the company. And so there's a lot of people to get on your side or keep on your side and work through the process. It's a very detail-oriented business, much more than I had anticipated.
So you were going through the entitlement process as well as initiating it for development.
Yes. Yeah. The finding this, as it turned out, finding the sites is challenging, but that becomes the easiest part.
Yeah. So going through the whole process, what would you say is a typical length of time from the time you find a site till the time it's ready to build on? Which I realize it can vary all over the map, depends on the city, how big the project, and all that. But I think a lot of people don't realize how much time that takes.
Yeah, we would typically put a property into escrow, and then it would probably be 18 to 24 months before we would get our full approvals for a project.
And in fact, that's such a tough process that there are companies out there that specialize in nothing but just the entitlement process, right? They take raw land and they get it to the point where it's ready to develop and sell it off to developers, because developers don't want to have to focus on that. Their expertise is in building and selling the product, and that's a long process sometimes to get that land ready to build on.
Yes, there are. That is an opportunity for people that want to take it on, kind of go through the struggles to make that happen, and then they may not want to take on the risk to build the houses and the development, which becomes a much more market risk oriented, and so it can be very profitable, especially when the market is moving up. Because as you can get things approved, the market's escalated since you started the process.
So in your experience with that, you were on both sides, weren't you? You went through the development entitlement process with it, and then you also were involved with it during the development process?
Yes, yeah. So we, the companies I work for, we took it from start to finish. So we would get the projects entitled, approved, and then go out and actually construct the houses, market them, and sell them as well.
For someone that hasn't done it, thought about doing it, what are some words of advice or thoughts? What are the big gotchas, and what are the about it? What do you have to be careful about the most?
Well, I think you got to be careful about not doing the homework and really trying to get professionals on your team that have the expertise to really guide you and show you the right areas that you want to buy in and how to buy property. And the other part of that is having realistic expectations going in, and not, when you put your pro forma together, not bumping it up just for the sake of trying to get a high price.
Mm-hmm. Yeah, it's hard to over recommend having experience on your team, isn't it? One of my close friends who became an angel investor, I asked him one time what was the most important thing to look for when they were adding management to a startup company to make it successful. And he said getting somebody on that team who had done that exact thing before, whether they failed or were successful. There's no substitute for that. We have with us today Rick Knauf, who is the managing partner of Colliers International for the San Francisco Peninsula office. And we're glad to have him here live in the studio. We are talking about the great world of commercial real estate, and we'll be back in just a little bit to continue that discussion. Stay with us.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Welcome back. We're fortunate to have today in the studio Rick Knauf, who's the managing partner with Colliers International that focuses on the commercial and multifam world. And Rick is sharing with us what he's learned in that business, and we'll talk later on about the marketplace and so forth in our part 2 segment. But we're learning a little bit about what he's learned through his career and also personal investing in this arena. So Rick, what talk to us about the prior segment about how your career path went with Colliers and doing development and entitlement work, and then later on into the commercial leasing and sales. In parallel with this, you decided along the way to practice what you preach, right? And you invested in some multifam products yourself.
Yes, Tom, I did. Being in the brokerage business for several years, you're basically on commission 100%. And so Jody and I, we decided that, we wanted to try to build some cash flow going forward. So we got some good advice from some good people on marketplaces. And so we've been fortunate to invest in 3 different multifamily projects. Actually, we have partners in all of them. And it's worked out well. We've been very fortunate with how it's gone.
And where are those locations? What size projects were these?
We've got a 14-unit project in Sunnyvale. We've got actually a 16-unit project in Southern California. And we got into that kind of looking at the market at the time, so kind of worked with local experts and timed that one with the market. And then I've got a good friend of mine from Santa Clara University, where we graduated from, who lives in Anchorage. And he called me one day and said, hey, the market's ripe. And so anyway, long story short, we have a 42-unit project up in Anchorage. I
think you're the only one I know in this area who has something up in Anchorage.
Me too.
So that must be a quite different market. Is that tapping on military tenants, or?
Yeah, that's a great question. Yes, it is. There's a lot of military tenants, and the area in Anchorage is very transitional. You've got people that say, "Hey, let's move up to Anchorage and try it out." And so, the rental market, we've been up there for 22 years, and the market has been very solid from a rental standpoint and an occupancy standpoint since then.
You have a fairly high turnover, but the vacancy time is short between turns.
Yeah, I would say that's probably good. Mm-hmm. The average occupancy is probably 1 to 2 years. The other reason that it's good for rentals is that people don't go up there and buy. A lot of people go up there and rent and try it out.
That makes sense. Mm-hmm. That makes sense. Interesting. And are they mostly one bedrooms? Interestingly enough, my best performing multifam, I've owned 7 of them in Dallas-Fort Worth. My best performing one is mostly one bedrooms. And I've, had, of course, you tend to remember a lot whatever your personal experience is, but the problem is sometimes that, it's a small sample out of the total place. And on the surface, one would think, well, one bedroom, very transitional. But if there's a market there that's going to be strong renters and always strong renters and high demand, I find my make-ready cost in my one-bedroom, 68-unit apartment house, and 52 of them are one bedroom, and it's just very consistent and predictable. It's worked very well. Sounds like you've had a similar experience there at your Anchorage property.
We really have. And then, even taking that one step further, now in urban areas like San Francisco, downtown San Jose, and other areas around the country, they're now building what they call micro units. And so they're actually more like a studio. And so they're really reaching out and trying to appeal to the young professional.
Mm-hmm. Yep. Well, it's always trying to find a niche. People want to know about a marketplace or the perfect product, and it's really thousands of submarkets and thousands of different kinds of products. And most of the data that we can get hold of easily is quite broad about metros and broad about products. And I think the standard deviation is pretty significant on how individual products and submarkets and neighborhoods can run. So when we come back, we'll wrap up on this a little bit, and then we'll start to move a little bit more into commercial. We have Rick Knauf with us, managing partner of Colliers, here in the studio today, and we're talking about the world of commercial real estate. So stay with us. We'll be back to talk more about the commercial real estate. This is Tom Wilson with Real Estate 360, KDOW, 1220 AM, the Wall Street Business Network.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Welcome back. Having our studio today, Rick Knauf, who's managing partner with Colliers International Commercial Brokerage House. And Rick is sharing with us his experiences, both his own as for his own investment and with his career in the real estate and commercial world. We're talking before the break about his experience with multifam properties, which he has one in Southern Cal, one here in Silicon Valley, and one up in Anchorage. The one up in Anchorage is all one bedrooms, and is that your most consistent performer?
Yes, it is, Tom. Actually, it's the market's been very consistent, and as we were talking about earlier, the one bedrooms has been the magic number up in that marketplace.
You really need to understand local markets. Now, what most people would assume that up in Anchorage you got to treat differently than other areas, right? Got to deal with weather, transient people who are going to try it out, they're on temporary work, and so forth. And it's you really need somebody, and you have a you said a college buddy that actually lives up there.
Yeah, he grew up in Anchorage, and after college went right back up there. Loves it up there, and so if he wasn't there, I certainly wouldn't be an investor up there. He's in the real estate business up there, and you've got to have the local expert. I
love telling a story about a friend of mine who decided to expand investment world and went to. Found a place in Salt Lake City that was 2 miles from University of Utah, and it was only 50% occupancy. And he said to himself, "Aha! I'm going to solve this problem. We're going to fill it up with students." So he bought the place, found a property manager, and said, "Well, here's what I want you to do. I want you to fix this place up and focus on renting it out to students." And she said, "Well, I'll do whatever you want, but if maybe it would work in California, but here in Utah, students aren't going to take their bicycles 2 miles through the snow to get to the university." so you really got to understand the local specifics and the local submarkets, and you got to have partner or team members that understand that very well. So even though I've bought and sold a lot of product in Texas, I tell people if I decided to start investing in another city. Sure, I'd have a lot of transferable experience I think would help me be successful, but I wouldn't consider doing that without having a broker and all the team members that it takes that understand and know that particular submarket extremely well. There's just no substitute for that.
Yeah, just the local team like you're talking about, whether it's property management, local investors, local lenders. There's just a lot of different details. You're going to learn a lot from each of those different people, and so you put it all together, you really start to understand a marketplace.
Mm-hmm. On tapping a little bit more on your personal experience, what are some things you've learned that not do in the multifam business? What things have not worked well?
I think when we looked at Salt Lake City as well. And we thought it would be a good opportunity. The market cycle was there, but so we bought it. We got a property in escrow, and I think what we did was we took kind of a snapshot of the market at the time. If you don't really know something well, and you're kind of floating in, you might just take a snapshot versus what you might refer to as a video, where you're going in and really trying to understand the market. So in the middle of the process, we figured out that it wasn't a good idea. So we backed out and decided that we were better off going to other areas.
And was that a good decision?
I think it was, Tom.
From what
I think
learned?
it was.
Okay. We got Rick Knauf with us, managing partner with Colliers, talking about the world of multifam and commercial real estate. And we've got a lot more coming for you right after the break. This is KDOW 1220 AM, Wall Street Business Network. We'll be right back.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.us. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Thanks for staying with us. Rick Knauf here in the studio with us today, managing partner of Colliers International Commercial and Multifam Brokerage Firm here in Silicon Valley, learning a lot about things that Rick has learned through his 31 years of experience in the real estate business, both personal as well as career-wise. So before the break, we were talking about things you've learned in the in your own investing, and one was you said to be real careful with the submarkets in different areas. What else have you learned in the multifam, your own personal multifam experience that you could share with others, things to avoid, besides, other than getting the wrong timing and wrong market? Right.
I think something that you learn sometimes through mistakes is, things have to be maintained at a project or whatever kind of real estate you own. And sometimes you'll let things go, which is referred to as deferred maintenance. And once they go, then by the time you need to fix something, it's going to cost you a lot more money usually. And so I think one of the things we learned is really to maintain our properties consistently. Keep the landscaping in good shape, keep the trees trimmed, keep the units in good shape as they turn over, keep your roof in good shape, and I think it ends up saving you money. But at the end of the day, your property is going to look better, and your renters and your tenants and clients are going to like it better and probably get some more rent out of it.
Anything you can share about selection of tenants themselves or in marketing for them and that sort of thing?
Yeah, I think the quality of tenants that we've seen in our projects have changed over time. I think people may remember the .com boom back in the late 90s, early 2000s, and at that point, our rents escalated huge. We had many people moving into Silicon Valley for technology jobs because that was hot, and there was a lot of successes going on, a lot of companies being established and formed, and so our rents went way up, and so we had a very high level of quality of tenant, and so which had high credit. They had good income. When the market goes down, which followed that cycle for maybe 2 or 3 years later, you didn't have the high quality as high a quality of tenant with the income level, so you just have to adjust. But also you also have to check people's credit and background and things like that.
Becomes a lot more challenging when things are tough, and it's like any path or business or on the road. I've learned that you can go along that surface street at what seems like a pretty good clip, and that one stop sign or one stop light really kills your averages.
Yeah, at some point, we always are expecting, I call them speed bumps, and it's not whether they're going to come or not, it's just how big the speed bump's going to be, so you just got to be ready.
And how you're going to navigate it.
Yeah.
Yeah, you don't want to be on roller skates when you're doing that. And you haven't, what I was going to ask you one other thing, how would you say the difference in size has affected the results? Do you think there's some correlation of that in your multifam experience?
Yeah, I think the size of units that we've got, which are small to medium for multifamily, has been a good place in the market. I think if you've got much larger projects, you're going to have more challenges when the market's down. And I think so. We've been able to keep our units pretty much filled up. In the multifamily world, at least in the Bay Area, the demand is always there. It's just and so we always kind of figure out, for the most part, you're going to be able to keep your units filled up. You may not like the rents, but you can find people to occupy them. In the commercial world, if you've got office buildings and the office market's down, or the industrial market, you may not be able to fill it up. I mean, it's a different kind of demand structure.
Mm-hmm. And what about the size of the overall project? What about let's see, your largest one is 42 units?
Yes.
Mm-hmm. Yeah. And your smallest one is?
14.
14. Yeah. Do you see any correlation there between that and results, or do you think it's better to have larger projects? Or
I think in that with a response to that, I would say the larger projects run more efficiently, and so from an expense standpoint, you're gonna have lower expenses per unit. So I think that is very helpful.
And in the Yeah, I've one thing I like about in the multifam business, when you get up to, I like to have projects that are large enough to afford a full-time on-site manager and full-time on-site maintenance people. Because your manager, if you can afford to have a full-time manager, and for each region, you got to have up to a certain level of income for that region to be able to afford to do that. And I just there being able to keep control on it, keep an eye on it all the time. And again, of course, good property management is critical no matter what it is, what kind of real estate it is. But I find that's very advantageous, and also the economy of scale, the efficiency of the repairs and make-readies if you have an on-site person doing that. And it's that's one of the harder parts to tackle if you have a small small multifam project.
Right. And then you mentioned the on-site management, having some eyes and ears on site all the time cannot be. There's no other substitute for that.
I find one of the advantages of having, a portfolio of houses over a small multifam is that when they're spread out over a large area, then you don't have this kind of critical mass of potential bad problems or tenants together in one spot. When you have one address with no one there, you can show up in 2 weeks and find a druggie chased out half your tenants. Yeah. But it's a little tougher to go that fast if it's on if you have someone on site, or if you have a kind of investment such as small properties like houses that are distributed over a large geographical area, and you don't have that one affecting the other quite as much. We have Rick Knauf with us in the studio today. Rick is the managing partner of Colliers International, who is the major brokerage firm for commercial and multifam products. We're learning his experiences, and we'll wrap up with some takeaways as soon as we get back.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Thanks for staying with us. Rick Knauf in the studio today with us, talking about the world of commercial and multifam real estate experiences he's had, both at Colliers International as a partner and with doing real estate development with houses and working with, and we've talked also about his own investments in multifam. I think I always like to work with people who work exclusively with a certain type of product that I'm interested in, and especially if they also own some of that kind of product. They got their own skin in the game, and you learn a lot more owning something yourself than reading something in a book, don't you?
That's right. You can't underestimate that.
No. Any kind of takeaways, things we've talked about on this program today that you've learned through your own experience investing and your career? Part 2, we'll focus on mostly the commercial world and what your comparisons are and what you've learned from that. But today we focused on your experiences. Any kind of takeaways you want to share with people?
Yeah, Tom, I think one of those would be when you get in and are looking for investment property, you really want to connect with somebody or a team of local experts, and you're going to find out so much more from 1 or 2 or 3 people than you could ever on your own, because they're living the marketplace. I mean, that's their job, that's their expertise. So really finding somebody that is a specialist can really make real estate investment much more successful, I think.
And not just someone that has experience in the past, but someone who's, like you said, living it and breathing it in the real world right now today, because real estate is so dynamic with the times, isn't it?
Oh, yes, it is. Very cyclical, and the market is always, the one thing that's consistent is the market's always changing. So you need somebody that's in the market right now.
Rick, if people want to contact you for more information, or if they're interested in multifam commercial investments here in the Bay Area, how can they get hold of you?
Thanks, Tom. I'm in the Redwood City office for Colliers International. My phone number is 650-486-2244. You can look at us up on the web at www.colliersinternational.com, and then you would look for the Redwood City office, or my email address is rick.knauf@colliers.com.
Great, nice to have you with us today, Rick. Thank you, and we'll have another program with Rick where we're going to focus more on the commercial arena. And remember that if you would like to have a weekly real estate economics newsletter, Wilson Investment Properties is you can go on our website, tomwilsonproperties.com, sign up for that weekly newsletter, and that will give you a nice short read on what's going on in the world of economics as it relates to real estate. Also, if you would like to have a consulting session on what to do with your portfolio, we'd be glad to assist you with that as well. So and also we always welcome, of course, your questions and suggestions that you might have for future programs. So thank you for being with us on this segment. We look forward to having you back on the next program on Real Estate 360. This is Tom Wilson, and remember, the only thing that matters is what you do next. Hope to see you on the next program.
You've been listening to Real Estate 360 on AM 1220 KDOW. For more information on today's program, visit RE360radio.com. That's RE360radio.com. AM 1220 KDOW.